3 main tips to finance from the bank of mum and dad. Now, out of all the clients that I've helped, a lot of them have actually gone to their parents for financial assistance, but it's not a guaranteed thing. Your parents do not have to pay you this money. It just helps if they did. And I'm going to give 3 pointers that will help guide them in that way. Number 1 is all about building trust. You have to have financial maturity where your parents can actually trust that what they're about to do with all their hard-earned equity, all their hard-earned capital gains, the bills they've managed, the rates they've paid for years and years, are about to give it to you and it's not going to be a waste. Things that parents would most likely want to see is, do you actually have a good track record of saving? When you call it the bank of mum and dad, that's the best way to look at it. They are just like another bank. So they're going to want to see evidence of you savings. Are you also a ridiculous spender on things that are unnecessary? Do you also have other major debts, huge credit cards that you haven't paid off yet? When your parents go to give you this money, it's going to be done in either 2 ways. It's going to be straight equity from their house, or it's going to be actual cash. When you ask for money from your parents, it could be something as small as like $5,000, or it can be all the way up to a few $100,000. When you think of, say, a celebrity and they go and offer to donate a huge generous amount to a charity organization, you know it's one of the things they mostly do? They match the donation. So if you said to your parents, hey, mum and dad, I've saved myself $30,000 to go towards the house deposit, your parents could say, that's cool, we will match that $30,000. Now that is a great strategy because they like to know that you've had some skin in the game. They aren't the only ones that are on the hook in case things go wrong. And you saving $30,000 is quite a significant amount for them to trust that you actually have some financial literacy. So number 2 is to make it a win-win. The parents want to know they have done this with you, where it's not just like you've called them up and you've asked them for money, they've done the deal and that's it. They want to feel involved in their kids' lives. So this is one of the things where you can tell them these 3 points. This can be a legacy for our family. So using the equity, say in their own house, or giving cash so you can buy another asset, this could be something for their grandkids. Most parents do want to feel involved in the biggest decisions of their kids' lives. And the other thing about it is that if you are asking them for money, chances are the parents are going to step up the game of doing due diligence on the house and also the area. And a win-win, of course, when you're asking for money, there's going to be the questions on, okay, but how do we get the money back? So this is where you have to have a clear, say, payment plan. I know some people that have offered to pay $200 a month over, say, 5 years. You can also go with a straight up exit strategy where you say, we're going to buy the house, we're going to renovate it, we're going to do some landscaping, we'll do some painting, and after 2 years we will sell it. And especially if you've got kids and you know you're going to have to move towards a school anyway, so they know you definitely will sell it, that's when you can cash them out. And of course the other way is just increase the value of your home and then pull some equity out in cash and then pay them back, and maybe like only 50%, and the remaining 50% you can pay them off over a few years. One of the best things I always tell people is that you don't want your parents to just have this thing where when they pass away, they give you the house, they give you the assets, it's in the will, and they don't get to see what was done with all their assets that they had while they were alive. One of the conversations that people can say to their parents is, do you not want to utilize it now while you can, while you're still alive, and actually see what happens with it? How we can actually grow your assistance into something way bigger? That is what I would like. I would not want to just, pass away and give it and not know what they ended up doing with it. They cannot lean on your guidance when you're dead. So when you're saying to your parents, you have the equity, you have the cash, you can help out now, and we can all work together as a family, as a team, to eventually grow these assets into more, which will benefit the family to come. And number 3 is all about timing. Timing is literally everything when it comes to asking money from your mum and dad. So you cannot just go and ask them for this type of cash where the only time you've ever called them for the whole of the year is to ask for money. That is just bad on your end. The other thing is, during tough times when you know they physically don't have the money or the equity to give it, people will come to their parents at the peak of the market asking, hey, mum and dad, we want to go buy a house because house prices are rising. The parents could actually, if they were well experienced in the market, could say, no, this is not the time you should buy. Things are overinflated. This is the peak of the market. Come see us in the next 2 years. I think you should just rent till the market cools down. And then in 2023, 24, come see us and then we'll buy them. That could also be an option. So the thing is, when they say no, it could be for 2 reasons, as in timing, it's just not right now, or the no is basically like they just simply don't trust you. So both of those things that you can work on to build up their trust and wait for a better time in the market. Just getting the no out of the way as fast as possible, because what you don't want to do is just wait for so long and then go and ask them and they say no, and then they tell you the real reason, and then now you have to work for months to fix that issue. Or you could have found that out earlier, found out what things you need to actually improve on and fix way earlier in the year. So to summarize, if you are ever thinking of utilizing the bank of mum and dad, what you should be doing is, from those three things, is to know, does your parents actually have the capacity to help you out, either in equity or cash? Is the time right to ask them now? Because the market has dropped, their equity position in their house could have also dropped. There's going to be other things there where they go, okay, let's go speak to the broker together. The mortgage broker might say, if your parents are going to help out, we need a registered valuation done on their house so we know exactly how much equity they have. Now, if there's any expenses that come from getting your parents to help you, you should be paying for it. You should be paying for the valuation, you should be paying for the lawyer's fees to do up the loan docs. Everything should be on you if you wanted their assistance, which is only fair. There's a stigma where people think that using the benefit of having wealthy parents or parents in a position to help you is seen as a cheat code in today's world. It's cheating. Not at all. If you have kids, one of the biggest things that parents want to do is literally help their kids. That's why they exist for. And people want to feel useful, so do not feel like, you can't ask your parents for this help. And it's just popping up everywhere. It's becoming so popular in 2025 with just the economy and the transition of wealth, where baby boomers are giving it to their kids, and then those kids are your parents. So, some of these people were just handed these assets as an inheritance, and they do want to feel like they want to give it back to their kids. If they're not going to utilize the equity to grow the asset, what could happen is, if they're not financially literate and smart, they could just end up selling it and leaving so much money on the table. So this is where the main point here is the trust, which was number one. They are more likely to help you out with this type of request if you are educated. If you are educated on the market, how to analyze properties, how to buy well, negotiate a really good price, know how to leverage off the asset that they're going to help you buy, so you might get into flipping a few houses and paying them back faster. If you surround yourself with people that are in the property space, so they know that when they invest in you, they also know that you're hanging around with the right type of circle, that is more likely to get you funds. How can you actually learn that? As I said at the start, a lot of the clients that we've worked with, they have utilized the bank of mum and dad. They've come to one of my seminars, or they've done the online course content, which is on the InvestorPro platform. A great way to start, and you'll know all the lingo and all types of strategies that will work in 2025. Because when you're going to ask your parents, definitely needs to be at a certain location where you guys have no time restriction. It's in a nice quiet place where you can actually have a good conversation on how this works. Again, this works into timing. If they bring up any certain question about the housing market or the type of property that you're wanting to buy, and you don't know how to answer it, the chances of you getting their funds significantly drops. So you don't want to be in that position. Get prepared, get educated, so then when you actually do ask for the funds, there's a huge chance that you get it. And of course, this should be always seen not taking advantage of them. This should be seen as helping them, because if you are educated, the asset that you're buying should, guaranteed, if you've done it right, increase the value and the wealth of your family.